Good morning. Welcome to Trading with Larry. Unfortunately, Larry can't make it today. I'm Eric. I'll be here. We're going to be joined in a couple of minutes by Larry's analyst, Clint Brewer, and I've been doing the podcast with him over the last couple of days. And happy to hear about his in-depth insights into the market. He'll be joining us in a minute. Larry, unfortunately, he's traveling and it's a little bit of technical issues in the hotel room, but um, maybe he'll join a little bit later. And before we start tomorrow, just as a reminder, it's Juneteenth. The markets are going to be closed. The podcast, we're not going to be on tomorrow morning. Okay, so we'll get that out of the way. And it's Fed Day. Every single Fed meeting is like the most important Fed meeting of our life, right? The big buildup. I think this Fed meeting actually has been flying way under the radar. But to me, I think it's important because I think the market has been having this idea that there's a 50 basis point rate cut by December in the bag. I think they're operating under that premise. Fed fund swaps are pricing that in and have been pricing that in for a while. But the economy is actually humming along. And I think we're about to be joined by Clint. Clint, are you here? No, not yet. But there's what's up, Clint? Good morning.
Good morning.
We're battling all sorts of technical issues this morning.
No, all good, all good. Happy to be on again.
Yeah, so I just reminded everyone tomorrow's Juneteenth, so the markets are closed, and started talking about the Fed a little bit, carrying over what we spoke about yesterday, which is this idea that the Fed is going to cut a total of 50 basis points by the end of the year, and maybe they're not. Maybe they're not going to do what everyone thinks they're going to do. So today's the Fed meeting. From a trading point of view, that from 9:30 until 2 o'clock when that statement comes out, it's a very trappy kind of market where less is more, less is much more. I usually personally fight myself not to put on any trades, no matter what kind of signals are firing off, because they're kind of like low probability day trades before the Fed. And then 2 o'clock comes out, you have the algos doing everything. Nobody real is trading, right? You don't have like portfolio managers running billions of dollars sitting there in the conference room, and as soon as the statement comes out, they're like, "Buy 100 billion of SPY." Right? They're not doing that. It's all algos from 2 o'clock to 2:30.
You mean it doesn't work like that, like they show you in the movies?
All right, it doesn't work like that. No, no, that's exactly how they show it in the movies, right?
Yeah.
They make it they Hollywood it a little bit. So it definitely doesn't work like that. So from 2 to 2:30 is just all algo. I would, I bet you, if we take all the 2 to 2:30 Fed day intraday moves, it's going to be basically on average like unchanged. Over time, and then Powell comes in 2:30 to 4 o'clock, and I think that's where maybe some real traders start to step in. And here's Larry.
Surprise!
Larry, I'm giving them the roadmap
Oh,
for
you
how to
gave it to
handle
him
the Fed
already?
today.
Oh, can you fill me in?
Well, I've been basically saying you cut the day into three pieces. Try to stay away from 9:30 to 2 o'clock, which is notoriously trappy before the Fed. Algos take over from 2 to 2:30, and then from 2:30 to 4, maybe there's real trading.
100%. I used to love these days when I was trading like on the floor or whatever, because these days are the kind of days where you don't put positions really on before the Fed. So you really, it's almost, I call it like a holiday day, even though you may have core positions. You literally put positions on that are, going to basically take effect after the Fed, unless you have a strong opinion. I think today could be very interesting. I don't know if you started discussing, thoughts on what the Fed may or may not do. But
Yeah, Clinton and I talked about this a lot yesterday. But go ahead, Larry. Tell us what you think.
my thought is I'm a little leery. You got a really weird week. Okay, so this is quad witching, which is traditionally one of the busiest weeks of the year. A lot of volume coming through the tape on Friday, but I would say that with this Thursday holiday, it throws a wrinkle into everything because options expire AM and PM, but most people trade the AM expiration for S&P, etc. And it's going to be hard to get out. You're going to have to get out tonight because you can't get out on Thursday, and you'll be cashed out on Friday morning. So I think this Fed meeting might really move the market a lot. And I think if he swings to the dovish side, which maybe a potential possibility. I don't see how he can do it, but you've seen this before. The market might ramp up off of that to to new highs or to the high area potentially. I'm not saying he's going to do that, but it's like in the back of my mind a little bit that may happen because Trump's been chomping in his ear.
Is there any chance of a cut today? Even I mean, even if it's a slight chance, do you think they're entertaining that at all?
Zero. I think zero for that. There's way too much uncertainty between the pseudo war in Iraq, Iran. I mean, not Iraq, Israel, Iran, and a number of different things out there. I think it's interesting though. Nobody's talking about tariffs. And the tariff date is pretty close, right? It's a couple of weeks.
I think it's July 9th, I believe.
I thought it was July 5th, right? Or maybe I'm wrong.
Either way, it's coming up. It's coming up quick.
Yeah, because I thought it was like the day after Independence Day.
Yeah.
He was going to rain down on these guys, but I don't think that's even in the cards. So I would assume that there's going to be a pushback of another 90 days. I always thought that was in the cards. So, there's a number of different things out there. But today could be very, very interesting.
I read something interesting. I think it might have been on Bloomberg. And it basically said that one of these guys that are on the FOMC, on the rate setting committee, one of these guys that are coming for Powell's job, did they vote to cut rates?
Really? I mean,
Yeah.
I think, I hear he wants Besant in there. He's trained Besant perfectly well to listen to everything he says. So Besant's probably the top guy because, he'll get to talk to him and, manipulate him. So I think that's the guy potentially. But
If anybody votes to cut rates today in the Fed to get that job, then the Fed loses its apolitical status, in my view.
well, I don't think they really have any apolitical status. I think they kowtow, especially in this administration. But there's a lot of cross currents, a lot of interesting dynamics. Yesterday, I thought was a really interesting day. There was a lot of news being thrown at the market. The market looked like it wanted to go positive, and then there was some bantering around, I guess, that Trump wanted to take out the leader of Iran, which about 3 days ago he didn't even want to back anything. Now he wants to take the leader out. So yeah, and they better surrender and this and that, and obviously another day has gone by and not a lot has happened. So I don't know. I don't know what you guys think on that.
Oil is creeping back up. It's weird. Like oil is creeping back up, and I think oil and gold right now uh, are kind of like the new VIX a little bit. But what's been interesting is over the last couple of days, oil's gone back up, but gold hasn't. So is there fear? Isn't there fear? I feel like the market is like trying to hedge on both sides, a little bit. Um, but oil is in the mid 70s, and I've been saying, probably the soft inflation print are going to be the last soft inflation prints we see in a long time. So I just don't know how the Fed could come out dovish with a market at near all-time highs. Commodities look threatening again, and I just don't know. And if there's a lag effect with tariffs, and then we're going to see inflation from tariffs down the line at the end of the year, and if the whole stagflation argument pops up again, you can't fight stagflation by cutting interest rates. So I'm not sure who he can bring into the Fed that would cut rates for him in that kind of scenario. In any event, and I don't see how the Fed could be dovish here at all, and maybe the market kind of starts to pick up on that a little bit. All right. Well, it looks like we have even more technical issues, but at least we got Larry in the door there. Clint, can you hear me? Can you see me?
Can you hear me? Okay, there I'm back. All right, I'll.
I,
Well,
I feel like we're singing that Who song. You
well,
ever, the
well,
Who? You know the band The
yes,
Who?
I do.
I actually caught them live once at Madison Square Garden, and instead of Keith Moon, it was the whole band, right? But instead of Keith Moon on the drums, it was John Bonham's son, the drummer of Led Zeppelin. His son was behind the drums. It was an incredible show.
All right, dude. Yeah, it was a
But
great show.
anyway, we're like, can you hear me? Can you see
Yeah,
me? The Tommy album. But I don't know if you heard what I was saying, but I was just basically laying down the case that I just don't see how. I just call into question the whole 50 basis points this year. You know,
yeah.
um,
Well,
you know,
I'll give my 2 cents really quick, and it's I think you do see the Fed try to we'll see if they can successfully execute a very dovish pivot. I think they start to really set the table for rate cuts. I think they do that because right now, the pressure's there. Right now, Fed funds is 2% above where inflation's at. The last time Fed funds was above 2% above inflation was just before the 2008 financial crisis. So they've definitely got room to cut. And I think they really start to try to set the table for that. One thing that I would really watch after the meeting today is how the 2 year treasury yield shifts. So the 2 year yield has a historical tendency to lead changes in Fed funds. So the 2 year ramped up before the Fed started raising rates back in early 2021. The 2 year pulled in below Fed funds before they started to cut rates. Right now, the 2 year yield is about 50 basis points below the high end of where Fed funds is at currently. So the 2 year yield would agree with the two rate cut scenarios this year. I would watch after the meeting and watch how the 2 year again evolves because I think that'll tip kind of how the market expectations for more or less cuts might be shaping up. But I think I'm in the same camp as you, Eric, where I don't think they're really going to get much of an opportunity to cut as much as maybe they want to this year because yeah, I think between tariffs and rising commodity prices, they're going to encounter an inflation problem in the second half of the year. And it complicates it further as long for the Fed, at least, as long as the labor market stays strong, at least as long as jobless claims are staying low.
I think I
yeah,
think
go ahead, Larry. You think they're going to cut rates this year at all?
I'm not 100% sure. I think it's really difficult to figure that out. Um, you know, it's funny. I heard you talking. I had to hop off for a second. You were talking about John Bonham's son, um, who is a neighbor of mine, Jason Bonham. Um,
No way.
yeah,
That's crazy.
he lives in my town. He's right here by me. Um,
Oh, you.
I
I
haven't
need to
seen
meet
him.
him.
I haven't seen him.
Larry. You need to meet him.
I
You got
haven't.
to meet him.
I haven't seen him in a while. But as far as what the Fed is going to do, I think it's not determined. I think there's a lot of pressure on the Fed to cut rates. I think the Fed is sort of standing back, but I actually think today's meeting could be very interesting because if he's turning dovish, it's going to open the door for him to make a move that I don't believe he should make, but that he will make to appease Trump. But market's right on the all-time high, so I'm not getting it. Um, Interestingly, bonds are slightly higher today, not a lot, but slightly higher, and that's interesting to me. So maybe they're getting a jump on that. S&P's had a very tight range for the day so far. I mean, I think I don't know where the straddle is. Could you price up the straddle? Because
Around 40.
I
It's
think it
around
may
40.
be
But like you always say, that's just pricing in 230 to 4, right?
right, but it may be a buy only because of people having to make moves because there is no Thursday into Friday. This is like the first time that I can remember in 40 years that there was a Thursday holiday in front of a quad which really I don't think people are prepared for. And there's going to be some flow on Friday that's going to be very big and will probably be bigger because people won't be able to roll those positions unless they do it today, right after the Fed. So today could be a volatile day, could be exciting. Again, I think it's really the tone and the language that we're looking for to see, what he's going to say. I mean, I think he shouldn't do it, but there's a possibility he will do something where he becomes a little bit more dovish, which I'm hoping he doesn't because I don't think it's the right move, but I think he's getting a lot of pressure here. So, and there's a lot of things in the world right now that are so iffy. I mean, I literally think, or maybe I'm wrong, tariffs are off the table right now. I I don't think they're even in the forefront of what anybody's thinking about. I don't even think
Yeah.
it's a thing. I don't even know how this has happened. You know, it's like, it was like a talking point for him to do whatever. No, he got nothing accomplished. Think about it. There hasn't been one trade deal. Things are still up in the air and iffy, and it's a little crazy out there right now. So there's a lot of stuff to look at. There's a lot of markets that are.
Well, Powell's definitely going to get questioned at the press conference about the war in the Middle East.
Yeah, but
The,
I
the
don't
fact
even. I mean,
war,
that's day
yeah.
5, right? I mean, day 5 is not really anything he can, you know, do anything about. And I'm surprised that they're saying evacuate um, Tehran. This that and then nothing happens, so it's and then Trump's like, they're gonna decimate you, we're gonna take the leader out, like it's back to the Trump taco trade. It's him blustering some BS first. When the war came, the first day the US was out of it, he didn't even back it. Then all of a sudden he sees Israel's winning, he goes on that side, and he's like, let's take out the leadership. So it's interesting, and I just think it's part of what is going on. It's like no follow-up. Like there's got to be follow-up. So we'll see on that front. I don't think the war plays into the Fed meeting today. He will probably mention it, but I don't think listen, over time in trading, from my knowledge, war is bullish. I mean, it's always been bullish. So I don't think this is our war or our even anything. So I don't think it means that much.
Why is that? Why I agree with you, and I've seen that, just through historical data. Even go back to 1990 when you had the Gulf War. By the way, interest rates went up on that, and oil just went straight up, but the market kind of rebounded. So why does that happen? Why is it bullish for the market? Why is war bullish for the market?
Because we always win. So, that's why. So basically, backing up, I think it
I think
was,
that's the best answer I've ever heard. I think that is the best answer I've ever heard.
well, like I think it was 92, if I remember. I think it was 92, um, was the original Iraq war. Like the market was really
1990, 1990.
90.
Yep.
I thought it was 92 where we had the movement. Well, if it was 90, that's when I first started with spear leads. I thought it was 92, the Gulf War, but whatever. Either way, what happened was the market was very nervous and cracking hard into that situation. And then the night of the war, basically the market was down overseas and then exploded up. We were up like 8% in a day. And I remember that day was crazy, but we were short the market as a firm, and we were so like you're not happy about a war, but we were basically thinking we were going to make so much money, and we got killed, literally. And the reason why was there was no overnight trading. Believe it or not, back then there was no way to trade overnight. So we were watching other markets to determine what was going on, but we couldn't really trade it. So it was now it's very
I
good.
can't even imagine. I can't even imagine not having access to overnight trading.
You know what? It was a good time. I'll just say that. You could sleep at night. You told me yesterday you stayed up till 5 in the morning. I mean,
Hey, you got to do what you got to do, right? I
that's a
mean,
little
you
crazy.
get stuck in a position, it's not working out. You're trying to manage out of it, and sometimes you got to stay up.
Yeah.
But a lot of the price action this year has happened during overnight hours. I think like the opportunities during overnight hours have actually been better than during the 9:30 to 4 o'clock.
Yeah. Maybe. I mean, listen, but it ruins you for the entire trading day. You're definitely not on your game. No way. Well, that's dude. I need rest. I need relaxation. I need zen. To me,
That's
today's
because you moved to Florida and you have adopted the Florida lifestyle. If you stayed in New York, like where you are right now, by the way, Larry's in New York.
yeah.
You would, you could do that 2, 3 times in a row and be okay.
Yeah. Meanwhile, I came to New York to escape the Florida heat, and it looks like it's going to be 100 degrees like all week. So I'm going back home quick. It's way too hot. 99 coming on Monday, 97. What's going on? We never have that. Move to Florida. It's beautiful. People
Yeah,
complain it's
I was
too
just
hot.
there. It is.
We're
It,
never we're never hot like this. But as far as today's trade, it's a wait and see. Straddle is cheap at $40. I think I don't even know how it could be $40. I mean, that's really low. Um, that's expecting nothing to happen. Again, we always talk about you only have a little bit of time to maneuver because the announcement comes at 2. The press is 2:30. Before he gets going, it's 2:45, 2:50. So you have an hour. So you're really buying that straddle for an hour, but I don't think it's not gonna. I think it's gonna move more than 40. I think you know. Well, we'll see. We'll see. I mean, maybe he
Yeah, I
won't.
like that. With the holiday sandwiched in between quad witching and the Fed. I think you may be right on that. Dare I say? So no iron
No,
condor kind of day. I
really.
agree. I'm not going to say iron condor kind of day today.
No, that means you bet
No.
everyone out there better start putting them on. Well, let's touch on some markets, because I've missed the show the last 2 days because I've been traveling. Went back to my old stomping grounds at the CBOE. It was pretty funny. There was a guy there who I traded with 30 plus years ago, who was still on the floor and came over and said hello to me, which was interesting. I mean, the floor is just a shell of its former self. The one thing I always saw when I was on the floor is you knew when you were getting close to the trading floor because you heard a howling or a buzz. And like now it's like a library. Like the New York Stock Exchange is a library. You could actually read a novel in there. That's how quiet it is. It's dead quiet. Used to have a buzz. It was kind of sad. It's kind of sad to see I'm back around now in New York for a few days, and went to the old American Stock Exchange where I used to trade options. That's out of business. It merged with the New York. It's sitting on the New York. There's been so many changes to trading that it's pretty unbelievable. But it's nice to be back. Looking at the market on the week, if you look at oil, it's been really an interesting trade, and I believe they rolled the contract, so we're looking at July. Is that correct,
No,
or
August.
we're looking at
Yeah,
August?
yeah.
What's the price of August?
75.32.
No, that's July.
No, that's July.
Yeah. So I think we're looking at
The
July.
Qs are CLQ
Yeah.
is at
Yeah.
73.65.
Right. Right. Yeah. So
Contango, deep contango, a deep backwardation. Sorry.
yeah. Well, obviously the reason why is because deliverable crude is going to be probably tougher to get this moment, and they're saying basically this is going to be resolved before delivery of the next month. So again, oil is off the
This
high.
is how backwardation looks like, right? This is the crude oil curve right now. Deeply backwardated in the front. Spot prices way above future prices, and this is what I'm looking at intraday on a daily basis with crude. The big question is going to be: is Iran going to utilize its economic weapon and shut down the Strait of Hormuz? If they do, this thing is going to blow out. It's going to look vertical, and oil is going to be above 100 if they do it.
Really? I mean, I don't think I don't think they have the ability to do a lot. So you know, we'll see how that plays out. If you really look at it, they're not giving a lot of respect to oil. It's up a bit, but it's not up anything crazy for what's going on. I mean, you're hitting the area where pretty much, I mean, we're the biggest producer of oil, I guess, in the world, but you know, those guys are right there, if you add them all up. So, yeah, I don't think it's giving it a lot of respect. Looking just across the board, all these trades are in the middle of nowhere. If you think about it, look, just take a look. You have bonds at 438, mid range from where it's been. If they get a bullish announcement for bonds to go higher, yields to go lower, we may trade to 4.25. Um, and have a sea change, or sit in this range. I don't think we're going that much higher, because you have geopolitical, you have a number of different things. Oil here, you know, kind of waiting for the next headline. Gold, you know, it's sitting again. It's at the higher end of the range, not taking out the old highs, and you know,
Everything is sitting. Everything around macro looks like it's a no trade, right?
currencies. The dollar picked up a little strength, but not much more. Bitcoin looks like it could get hit. It's looking vulnerable. Um,
Stop it.
it hasn't gone below 100. I'm thinking it does, but we'll have to keep an eye. Why is it? Why has it been sitting here for months and months and months and months and months and months? I mean, I'm looking at a chart. It's from basically April got crushed with the market, but since it came back up to the high, it's done this move. It looks like a lower high three different times. The first high was like 111 and change, then 110, and now 109 or 108, and now we're 104. It's not far off the high. This is Bitcoin, but it's looking to me like if the market doesn't rally, I know you like to think this is not a risk on asset, which you could pull up an overlay of Bitcoin and the S&P, and you'll see it's the same chart exactly, almost. And you know, we'll see. And Ethereum, uh, I'm glad you probably hopefully used the stop and you're not in that crap. It's down to 24.9, 24.90. So it was up at about 27 and change. So, it's come in a little bit. But that chart looks even weirder than Bitcoin. It looks like it's done this move 7 different times up to 2750 from the beginning of May till now. And it's had very little range. It's like a 300-point range. So keep an eye on these alt asset products, Bitcoin, etc., to see if they're going to break their uptrend here. And really, I don't see a lot. Apple, to me, I've been looking at Apple a little bit. It doesn't look great to me, but it just doesn't move. The thing doesn't move. It's literally been sitting here since mid-April. I'm looking right at it. It's like it's unbelievable. It's gone up to 210 two times, failed. So if this thing fails, maybe we get down to 180. It's just amazing, Eric, how they've taken everything that was a thing in April out of the market. Like tariffs are not even brought up. They're not even why. Where'd they go? Why?
The news cycle is very fickle, and for some reason, the market just gravitates towards headlines. This is just such a headline. I feel like the market is like a cat following a bowl of yarn.
Yeah.
Every headline that comes out, the cat kind of looks to the right, to the left. Pause at the short side, pause at the long side, and we're like nowhere. And I think it's just going to be like this all year. There's just a market fixated on news, like you said, April tariffs are bad. Now no one cares. Then they'll be good again, and then they'll be bad. War bad. No, it's good. No, it's bad. And we're gonna see the same thing out of the Fed. Everybody's going to all the headline writers are going to come out and people are reading this stuff. That's what's amazing. They read all these headlines. We know how the sausage is built, right? Because you have a newsletter. We're in the subscription business, but we're like real traders. We're writing what we see and then what we're trading. Headline writers, they don't do that. They look at other headlines and then just copy that headline and change the words around a little bit, right? And then you have massive headlines all over the place, and everybody's looking at it. And it used to be just retail, but I think institutional traders are the same thing. They just get influenced by the news, and it's just a yo-yo market.
Yeah, I see that for sure. But I have a different opinion. I think this year is going to get really interesting, and the market is overly complacent in general, although volatility is ticked up a little bit here, which, listen, if this was a straight bull market and easy peasy like it's been for the last couple of years, you'd be at a 12, 14 volatility, you know. Maybe we're at a 20 volatility because we were up so much before. Um, but this market, could go to a 30 volatility literally in 1 to 2 days. So I'm a little bit leery. I'm not saying we can't take out the old high. That may happen. But there's work to do in here. The only thing, again, I'm just going to sort of, leave with this is that I got this sneaky suspicion that the Fed is going to be more dovish. I don't know the reason why. I think it may be because he's met with Trump a number of different times. And I don't think Jerome Powell wants to lose his job. Okay. I really don't. I don't know why he wants it because he's working for an extremely difficult boss, right? Who's not really his boss, but he is his boss. Um, but I think he doesn't want to leave. And if you don't want to leave, you're gonna kowtow to the maker, to the man. So I'm thinking you may see him be a little bit more dovish today, which is not really the way he should be. But I'm thinking you may see that. So I would be leery of that. Oh,
Really,
outside,
you get that from Jay Powell, like his persona and just the way he carries himself. I've seen him talk, and
yes.
he always pushes. Really, okay, because he always pushes back on when he's asked by reporters, are you going to basically bow to Trump? And
Well, why would he
he is
say yes?
pretty firm.
Why would he say yes? He's not going to say yes in public. He's he's in a position right now where he's basically going to lose his job, and I don't think he wants to lose it. Honestly, I
Okay.
don't think
If
he
he
does.
loses the job, he's got a C-suite waiting for him at some big bank, like
Okay,
all the rest.
these guys are not motivated by money. If they were motivated by money or working in a C-suite, they'd be doing it. They want to. That guy's got more power than pretty much anyone in the country, including the president. So it's a powerful job. Sitting in a C-suite at XYZ company isn't going to help the guy, right? So I'm not exactly sure, you know, how to look at it.
I don't know. I actually think I don't know why, but I mean I know why, but I think there's the risk is that he actually I think the market might interpret him hawkish.
Really?
I just don't. Yeah, I don't see how he's going to come out with a soft message to the
Well,
market.
what's hawkish about him?
The market doesn't deserve it.
I know,
Why
but
would the market?
what's hawkish about him?
Well, I think the market may. I think what he's going to come out with is more wait and see, and the risks of inflation have incrementally upticked, and
Well,
you know
how? The numbers
yeah,
haven't shown that.
oil's up. Yeah, oil just went up 12%. Even before oil jumped, before Israel went after Iran, we were already, me and you, on this podcast talking about commodities rising without anybody noticing that, and then how there's a lag effect of CPI,
Dude, you know
where
what's
the
funny?
CPI.
I've gone 2 days. I've been so mellow, and I'm mellow
That's
on
what
this
I'm here for.
podcast.
I'm here to
I'm
rile
being,
you up.
I'm being really mellow. Okay. But what you're saying is
Yeah,
get
you're mellow. I don't like you mellow. I like
I'm
you
just
riled
saying what you're saying right now is actually getting me a little angry. And it's getting me
up.
angry because I sat there. I don't know where you were, but crude oil traded $150. Okay. 150. Okay. It's now 70, and you're panicking to this being inflation. We had crude over 100 for a long time, and inflation wasn't even brought up as a thought. I'm just telling you. So maybe other things were down or whatever, but I don't think crude oil going up 10, 20, 30%. Yes, it's inflation, but it's not anything that's what's it gonna lead to? An extra 30 cents at the pump? I mean, I don't see you know, I don't see it. I don't see oil, you know, getting people or the Fed, in fact, like totally freaked out at 73. I mean, listen, back in the day when we were trading it, and it wasn't even that far back in the day, maybe 10 years, maybe a little more, we were in a war and oil was trading over 100. Oil was over 100 for a long time. So, we just went from a scenario where oil was in the high 50s to now being 73. I don't find that to be that problematic. I mean, the level is the middle of nowhere. I mean, this is not high crude oil. You think this is high crude oil prices? I mean,
High crude oil relative to where we were. Yeah, yeah.
relative to where we were,
And
but
I don't think CPI cares about absolute levels. I think the way inflation works is more like on a relative
yeah,
basis, and then
but how is the way
sometimes
of
it snowballs.
yeah, but how
It's
is the
it's a
way of
weird
inflation?
dynamic. It's a weird dynamic, but I don't think absolute levels when it comes to like inflation, absolute levels carry as much weight as relative levels compared to like recent past.
Yeah, I get that, but literally oil at 50 is listen, eggs, look at the price of any pure like commodity out there has
Let's not
exploded.
talk about prices, please.
No, I'm not talking eggs. I just brought it up to say that like oil, like adjusted for inflation over the last 10 years is lower by a lot. I mean, this thing should incrementally go higher, just because it's diminished resource potentially. And I just don't think it plays into the cards like in an inflation way that the Fed is that concerned with at $73. They haven't, they're not selling oil out of the strategic petroleum reserve. It's, to bring prices down. They were actually buying on the lows, which is pretty interesting. I think we have our coffers filled. I don't think that oil is going to be a big play here, but really to wrap us up, because it's good to be back on the podcast. I thank Clint, who hopped off because he had some work to do for us pre-open, get us ready for today. I want to thank him for coming on. He'll be joining us, sporadically, to bring us thoughts and insights, and I appreciate him and you helping me out as I was going back to my roots, Chicago, New York, going on the floors, doing all of that stuff. And it was a lot of fun. And, we're going to wrap here. I'm going to give you the last shot after I finish and just explain that tomorrow is not a trading day. I know everyone who's in the market knows that, but for people that are watching, there is no trading tomorrow, Juneteenth. Again, it's weird because it's a Thursday before the Friday of expiration. But I will be coming to you Friday with my Ask Me Anything. So anybody that wants to send questions in, send it to feedback at the opportunistictrader.com. We'll get to your questions, and hopefully that will help educate everybody on the markets. And people that have questions, feel free to write in. And I want to thank you, and I'm going to throw it to you to finish up. And I'm not going to see you until Monday on the show. So
Yeah,
you have a long holiday.
that's right. Well, I'm gonna try to get to Manhattan Island to visit you at some point
Ah, that would be great. I'm here.
before Friday.
I'm here for a bit. So hopefully we'll do that. And I'm gonna I'm gonna
So
let
how
you.
many? We're gonna have dinner, but before we have dinner, how many dinners do you owe me already
I
from
owe you no
all the
dinner.
long texts?
I'm actually coming to Brooklyn, coming to your spot later this week.
Boy,
Going
let's
to
go. Then dinner's
going to
on
my
me. If you're coming to Brooklyn, dinner's on me.
coming to my favorite steak spot in Brooklyn. You know what it is?
What is it?
Peter Luger's.
Oh,
A
got
little
you.
Peter Luger dinner before I get back to Florida. It always helps. But anyway,
All right.
I think quiet. Till the Fed. I think there could be a surprise. You're going with he's going to be hawkish. Of course, I'm going with he's going to be a little more dovish. So
I think he's going to be hawkish, but so whenever you have a Fed or big CPI report, any of this stuff, I think just for people, the way I look at it, the real reaction to this stuff is very seldom on the news event. You get the real reaction, 2-3 days after the fact, when the market has time to kind of think about it. So um, I liken this market to a yo-yo basically, and I don't think whether he's going to be dovish or hawkish. I don't think that dynamic is going to change. And what's been working for me is just trading pure quant, no opinion, and then when the market gets to an extreme point, then you could kind of pile in. So I'd be patient. I'd be kind of like I'd shrug off any kind of initial reaction and just look to fade it.
um, yeah, I mean, I think there's more in store. I think it's quad witching. It never surprises me the move. So I'm expecting decent sized move today. So that's where I'm going with it.
By the way, did you put on a quad witching, your famous
Yeah,
quad witch?
my famous trade that's really been one of my best products. We're down a little bit. We own a outright call in the market, so we're hoping market goes higher even before the Fed. Maybe kick it out and may have to take it into the Fed. So we'll see.
Hmm. I've seen your customers make crazy money on those trades, like
Yeah.
crazy money.
Oh, crazy money. But, it's been tame the last couple of quarters. But overall, great product. And we're getting close to the opening. So I want to wrap. Again, thanks, everyone. Thanks for joining us. Hopefully, we're helping everybody. And that's our goal. And have a good weekend, Eric.
Welcome back to New York.
Thank
See you
you.
soon.
Thanks.